In the U.S., stock index futures were sharply higher ahead of open around 5 a.m. Eastern Time. Dow futures were up 147 points, indicated a rise of 169.01 points at the open. The Nasdaq and S&P 500 futures also pointed to a positive open for their respective markets. In economic data news, new home sales are due out at 10 a.m. Eastern Time, followed by the Dallas Fed's Texas Manufacturing Outlook Survey set to be released at 10:30 a.m. Eastern Time. The Chicago Fed's National Activity Index will also come out at 8:30 a.m. Eastern Time. In the corporate space, Dean Foods, Scripps Networks Interactive, and Fitbit are some of the companies due to issue earnings updates. Investors will be waiting for news surrounding the NRA's relationship with leading businesses, with a growing list of companies choosing to end their partnerships following the mass shooting at a public high school in Florida. In Asia, markets closed higher today, tracking gains seen on Wall Street as U.S. bond yields receded from recent four-year highs. Japan's Nikkei 225 advanced 260.85 points after recording gains of more than 300 points earlier in the day. Elsewhere, South Korea's benchmark Kospi rose 0.25% to end at 2,457.65. Amid the mixed tech sector, heavyweight Samsung Electronics rose 0.34% by the end of the day after unveiling its new Galaxy S9 model on Sunday. The Australian ASX 200 edged up 0.71% to finish the day as the index reclaimed the 6,000 level. The positive sentiment was also seen in Hong Kong, with the Hang Seng Index higher by 0.73%. On the mainland, the Shanghai Composite climbed 1.25% and the Shenzhen Composite jumped 2.25%. And back here in Africa, petrochemicals group Sasol's first half profit rose 17% on the back of higher crude oil prices and increased demand for its specialty chemical products. Headline earnings per share for the 6 months ended December 2017 rose to 17.67 rand from 15.12 rand in the same period the previous year, in line with what the company flagged to the market. Strikes, plant shutdowns, and an unexpected Eskom electricity supply interruption led to operational challenges at its Natref refinery and mining operations. Sasol says that it would settle debt from its Black Economic Empowerment Scheme called Inzalo of around 4.6 billion rand in June through existing cash and credit facilities. The company also says ratings agency Moody's has decoupled the company from the sovereign rating, which would allow it to have higher ratings and borrow more cheaply than the government. And Africa's largest bourse, the Johannesburg Stock Exchange, will begin listing project bonds from mid-March, giving institutional investors a window to invest in infrastructure projects. The bonds will provide private firms a chance to get a foothold in infrastructure projects in Africa's most industrialized economy, where project financing has traditionally come from banks and government. Capital markets have already reduced lending to some state-owned companies such as Seoul Power Supply, Eskom. South Africa plans to spend billions of dollars over the next 3 years to build and revamp roads, power stations, and ports. And in Kenya, residents of poorest counties say they expect to see at least a third of oil revenues injected into development projects in Turkana. Oil was discovered in 2012 in Turkana County, a vast remote region long neglected by successive government. Kenya National Statistics Office says 88% of the people in Turkana live below the poverty level, compared with 45% nationally.
In the decades before oil was discovered in the northern Kenyan region of Turkana South, 100,000 poor residents living in arid scrubland relied on a lone church-run health center in Lokicha town for medical help. Seeing the potential benefits of oil, residents of the poorest of Kenya's 47 counties now want central government to make up for decades of neglect by ploughing nearly a third of expected oil revenues back into Turkana. Parliament passed a draft bill in 2016 allocating 20% of any state oil revenue to local government and 10% to communities living where crude was discovered, leaving 70% for the central government in Nairobi. But President Uhuru Kenyatta never signed the bill. A revised version due to be debated in Parliament this month cuts the regional government share to 15%, with only 5% for local communities.
The money allocated to the people of Turkana cannot be able to solve their problems. This 30% that has been allocated is not enough. Will we use 20% for the country and 10% for the community so we can tackle poverty? Who cannot see that we don't have enough water, we don't have enough food, we still don't have enough hospitals, our children still don't have schools, people are still sleeping hungry. If they cannot offer us 30 to 20%, let them give us 15% of our oil, because we live where the oil is found. We are the custodians of this land in Turkana.
Most of Kenya's oil blocks have not been explored. Those owned by Tullow and its partners, Africa Oil Corp and Total SA, hold an estimated 750 million barrels. While that's less than Africa's frontier oil countries such as Uganda and Ghana, exports scheduled to start in 2021 would earn the government $1.2 billion a year at peak production at current prices. Now that's about 10% of annual revenue, comparable to the country's biggest export, tea. Tullow has already spent 1.5 billion shillings, which is about $15 million on community projects. But the row over revenue sharing has eaten into the oil company's tight timelines.
I think that our project timelines are very clear, that we have a financial investment decision by the end of 2018, and then we move towards the development after that. It's important to have the legislative framework in time for the final investment decision at the end of 2019.
The Petroleum Ministry official says delegations will visit established producers like Nigeria and Oman to seek advice on revenue sharing.
And after the break, UAE defends DP World in Djibouti port dispute. Details in a moment. Just stay with us.